Danny Moses of the Big Short fame is founder of Moses Ventures. He is shorting Tesla. Still, not enough for you.
Not enough yet. No, not enough yet.
What more is there here?
Well, it's still a $500 billion company, and I don't think that the fundamentals justify that valuation. And listen, if I was as good as trading stock as Elon Musk was, I wouldn't be sitting here. I'd be taking a vacation somewhere, because he has sold now $40 billion over the last 13 months as we move lower here. So.
Yeah, even if you put the short on when Elon Musk made the bid for Twitter, you would be in very good shape. I'm just wondering at this point, as you see the story unfold, what makes you so confident that there is more downside here? Is there something very concerning to you that's happening
So I think
here?
that a lot of the stock price has been about his brand, and we've seen that now get hit a little bit. And if you're a fundamental investor and you like Tesla, great. But I think still at this valuation, there's a lot of headwinds coming for the economy on a macro basis. Yes, they were early in EV. Yes, they were the best, or maybe still are the best, if you want to call it that. But a lot of competition's coming, and we're going into recession, it appears. So this is not immune from a normal economic cycle. And I still believe that on a fundamental basis, it's still very rich.
Yeah, just to be really clear, I mean, you didn't short the stock today, right? I mean, the stock's had like a big move here. You've been short. You've had a fundamental reason for the short. And I think that, as I've been talking to you over the course of this year, I mean, what's happened with Elon, it really is about him not being at Tesla. I mean, when you think about how much of that $500 billion market cap is encapsulated in his association with it, is the Twitter thing and some of the other stuff that's going on in and around it, is that a big part of it? Because if he is a big part of this valuation, and he's not likely to maybe have the same focus he's had in years past, is that part of it?
Yeah, he's running 3, 4, 5 companies, big companies, 3 very large companies at this point. And so there's a lot of, obviously, that he has to deal with. And if he's getting margin called, if that's the reason that he's been selling stock here, whether he's going to replace some of the debt, the unsecured debt, $3 billion that we heard about in the papers a couple weeks ago, we haven't seen a reason yet that he's sold over $7 billion worth of stock over the last couple weeks and months. So, that's on top of the $33 billion that he had done before. So it still remains to be seen. And I just think people, if you're a Tesla shareholder, and I have nothing against people being long it, you're getting frustrated here because his attention span is being compromised. And I think they want him to focus on the business, and maybe the business isn't growing like it used to. And that would be the reason to stay short. But to your point, Dan, I'm not adding here. Obviously, that's not a smart thing to do. It's down a lot, but put it in perspective. It's a 15-for-1 split is what this has gone through in the last, the 5-for-1 and the 3-for-1. This stock is still the equivalent of over $2,000 on an apples-to-apples basis from 4 or 5 years ago, from the time that 420 was the funding secured. So put that in perspective. And the last thing I'll say is, I think when stocks go down like this, that I don't believe trade on fundamentals, it makes you take a better look at what the fundamentals are. If it doesn't trade on that, what is the buying point? I don't know.